Refer to your statement of changes in equity. When you refer to retained earnings, revaluation surplus, you need to know that if we talk about the retained earnings, included in that retained earnings will be 100% of our parent. Our subsidiary, 100%. Once you compile your journals, this will then exclude our NCI portion, only the portion allocated. Now guys, why do I include the word exclude? Let's just think about the journal entry for our since period relating to our NCI. If there is retained earnings for our since period, guys, are you with me with the since period? Let me refer you to the analysis of owner's equity. Okay, the very confusing analysis of owner's equity. Remember, our since period will be number 2 here, guys. Let me color this orange. Okay, so it's this number 2, our since period, that I'm referring to. Remember, therefore, it will be this orange journal entry. Okay, so let's include this separately. We will debit our retained earnings. This is earnings, guys, it's not a loss. And we will credit our NCI in our statement of financial position, statement of changes in equity. Okay, therefore our NCI increase, and we now need to take out the NCI portion in our retained earnings. Therefore, the resulting amount will be the actual percentage then earned by our parent. And this total will be the total that will agree to our retained earnings opening balance. Now, exactly the same with the revaluation surplus mark-to-market reserve. What I want to do is I briefly want to talk about our NCI's opening balance. Now, when you refer back to our confusing analysis of owner's equity, guys, you will remember the first journal where we credit our NCI. Let's call this X. Guys, do you see this X? Where we credit our NCI, that total, X, and let's call our since period Y. The total of X plus Y will be the total of our opening balance of our NCI. Okay, so this will be the total of our opening balance. Therefore, let's say, for example, this is 25,000. This 25,000, guys, this yellow and red, X plus Y, will be the opening balance in our statement of changes in equity, this 25,000. Okay, so this is important to ensure that you understand this. We are still busy with our joint operation. Now guys, I want you to refer to the disclosure page. On your right hand side, I've included the IFRS 12 joint arrangements, your information that should be disclosed in each joint operator. Now guys, remember, this is for your joint operators. The name of the operation, the nature, the principal place of business, and the ownership interest, and if it differs, the details relating to this. Please refer to the last page in your lecture notes. This will include your complex groups. Now, on a third year level, you have to know 1 vertical groups and 2 horizontal groups. Now let's discuss the difference. When we look at vertical groups, we will have a parent that controls a subsidiary, and that subsidiary controls another subsidiary. Therefore, in this scenario, subsidiary 1 is a parent itself, and we will refer to this parent at the top as our ultimate holding company. Now, if you need to prepare financials or journals, where will you start? Guys, I've included this red arrow on your left-hand side. You need to start at the bottom. Therefore, first, you need to complete the analysis of owner's equity of subsidiary 2. Secondly, complete the analysis of owner's equity of subsidiary 1. And then only are you able to include all of the information. Now, why? Let's think about this, guys. In your analysis of owner's equity of subsidiary 2, you will have your total of your subsidiary. You will have the at acquisition, your since acquisition column, and your NCI column. Okay. Now, do you then agree with me, guys? We need to include the relevant information into our analysis of owner's equity of subsidiary 2 into the analysis of owner's equity of subsidiary 1. Now, why is this important to us? We need to be able to calculate the NCI portion, the portion that shall be allocated to our NCI. Therefore, in our parents' records, we will have the NCI portion of subsidiary 1 as well as our NCI portion of subsidiary 2 in our total group. Now, remember, important, if there is such a question, you need to have a structure, your plan of action. Now, first step, include your structure. Second step, include your timeline. And then include your template of your statement of financial position or profit and loss and so forth. Now, guys, important, include your column of your parent, include your column of your subsidiary 1, include your column of subsidiary 2, and include your column relating to your journals. And this will be your group. Now let's refer to our horizontal group. In a horizontal group, we have a parent entity that controls one subsidiary as well as another subsidiary. Therefore, where will you start? It does not matter, guys, either one or two, because you need to include this directly into your group. Okay, so it's not difficult. A horizontal group is easy. Your vertical group is your problem child. Again, guys, before you attempt group questions, you need to plan. Now, guys, we've reached the end of this lecture. I know that this has been an interesting ride. We've been sort of everywhere. Please spend a few seconds afterwards, regroup yourself, go through the notes, ensure that you are familiar with this. Now, I want to conclude. Guys, important, any requirement in a question in the exam, any requirement, you need to read minimum of 3 times. Ensure that you know what are they actually asking you to do. Then you need to plan your solution. Now, guys, remember, this is your workings. You do not have to do this neatly. You can think about that in your head as well. However, I do recommend write this down. Okay. First thing, include your structure. Ensure that you understand who is the parent. What is the accounting policies, separate versus group? Second thing, include your timeline. Ensure that you understand the flow of the transactions. Third, your templates. Either being your financials, statement of financial position, profit and loss, and so forth, or guys, your analysis of owner's equity. Remember that this is purely calculations. Okay? So my recommendation will be to use abbreviations in your calculations. But guys, please, big but, you cannot use abbreviations in your statement of financial position, in your journals, and so forth. In your calculations, yes. Okay. Now guys, then fourth step is your calculations. Now remember, if they require you to perform financials, include in your statement of financial position your columns, your parent, your subsidiary, your joint arrangement, guys, joint operation. And remember your basic principles. Get back to basics. Understand your journals. Guys, I know a student that actually always prepared all of the journal entries. It did take him quite some time, but he considered that he would spend more time on the journal entries and ensure that he know where everything has to be included. And that was really like an A candidate. So my point that I want to make with this is you need to practice this now. You need to practice how are you going to do this to ensure that when you get to the exam, you are familiar with your own structure. Thanks for watching, guys.